Welcome to Charts Today. My name's David Linton, and today's edition for Monday, the 29th of June, comes to you from London. And the big news really is that the S&P 500 index was down about 2.5% on Friday. So we are seeing this negative sentiment creeping in. Remembering this is my long-term, my medium-term, and my short-term view, weekly, daily, 60-minute chart here. And we see here we had a negative week last week, so we've started the process of having made a second high here, which is lower, of course, than the all-time high. So we are still in the medium-term bullish zone, but we've turned short-term bearish, and we'll be looking to that level that we set back on the 12th, 15th of June as support. And if we break that, that will be then we'll be looking to the next level, probably around this level that we saw back in May. And we do have downside targets here on the 60-minute chart that are pointing in that direction. So we do need to be cautious this week. We see here on the longer term chart we've got potentially 13% downside from here if we activate that downside target with further falls. So just quickly looking at the currency situation, the dollar is still holding its short-term bullish trend and the long-term bullish trend. The euro is actually still long-term bearish, and short-term we're out recovering here, but we are still below the cloud. The dollar yen has been static at 107 now for quite a while, and sterling has actually just been falling steadily against the dollar recently. So we are just seeing that still bearish on that long-term chart. And looking against the euro, we're below the 110 level this morning, so we are seeing sterling sinking lower there. Taking a look against the Swiss franc, we're at 116.64, so we are falling away there as well. And against the Aussie dollar, we've fallen through that 180 mark, showing the strength of the Aussie dollar against sterling over the last few months. Bitcoin's sitting at 9,000, just couldn't get above the 10,000 level, and we are short-term bearish this week. But we are in this range really between sort of the low 8,000s and the 10,000 level. But for the moment, short-term bearish this week. And the stocks we talked about, the S&P, the NASDAQ making a slightly different chart, of course, did make a new all-time high. So that's been quite bullish. So we have taken that all-time high, but we are just seeing a deterioration here. Downside on that 60-minute chart of 4%, 4.5% lower on those targets. Looking at the Dow, that was down 2.8% on Friday, so we've seen significant moves there. Taking a look at the futures this morning, the S&P futures up slightly, and the NASDAQ E-mini future is down slightly, so that does suggest a flat opening today. And European markets have recovered slightly on the change in those futures, so we are just seeing a little bit better there today. The DAX in Germany actually up 1/3%, but of course much the same picture here with a top that we made in early June, and that is now the level that will dominate. And the CAC Current, much the same picture as well. The DAX, the Japanese market was down 1.8%, the Nikkei, so that's into bearish territory. And if we look at the Hang Seng Index, we're down 1% there as well, and Chinese stocks were down 2/3%. So we are just seeing sentiment fairly low. Asia off before the futures markets really indicated where we would open today. Asia has actually been lower, and the Aussie market down 1.5%. So we've seen a significant sell-off there since early June as well. Taking a look at gold, we're sitting at 1769, still holding the bull trend on all three time frames. Gold with strong upside targets here, still on the long-term chart, some 12 to 20% higher. On the short-term chart, 5 to 11% higher, but a shortage of short-term targets at the moment. Silver is up 1/3%. That's looking a little bit better now, back above the cloud there, so bullish on all three time frames there. US 10 yield sitting at 0.65%. And if we take a look at the stocks, Apple, we saw here a bit of deterioration again on Friday. Amazon, also remembering that Apple, Amazon, and Microsoft are 1/3 of the NASDAQ 100. Amazon selling off on Friday as well, and Microsoft also just flat for the week. So looking at the energy mix now, we've got Brent crude down 1.5% this morning, holding the $40 mark, but we are bearish below the cloud. We do have some short-term targets lower, and WTI is clearer, so we have got downside targets here as well. 36.50 the target there. US NatGas made new lows on Friday, big moves to the downside there. That's broken the recovery trend. This chart is actually rollover adjusted because we've rolled into a new contract today. And so we've adjusted this history up, but this we were in the low 140s on the old contract. But the fact is, the continuous chart is now bearish. We are still clearly below the cloud and making new lows, activating downside targets to around $1. So quite worrying there for NatGas. Neutral this week. We just need to see new price action. Presenting new targets. Coal is actually looking like a long-term recovery now. We're seeing that on the daily chart. The higher low, and then the higher high. That's classic Dow theory turnaround, and we are seeing targets to the $62 to $63 mark, so coal is looking more bullish. Emissions have been a bit range bound, but they looks like a consolidation pattern at the moment, fairly neutral at the moment because we've got targets in both directions. Watch the 1 minute targets this week. MBP up 2.5%, looking still like it is into a long-term recovery, holding the short term. TTF has more work to do. Really now for TTF, we found support at €5. We need to break €6. So bearish below 5, bullish above 6. That's really the line on TTF. And if we look at summer gas, we see here that potential transition also occurring, but too early to say. German pound, no change this morning. Just starting to have a few bearish downside targets, but we are still holding on to the bullish position, and the long-term transition is assured. So that's it for today. Until tomorrow, happy charting. See you then.